Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where you get everything you need to know in 90 seconds at 9 o'clock, with news China is spending up large. But first, a signal from ECB President Mario Draghi that further policy easing is coming on December the 4th pushed the euro and government bond yields lower overnight, but failed to lift stocks, which have wobbled on some gloomy corporate and oil commodity news. Across the Atlantic, US jobs data out overnight maintained the positive outlook. The job openings and labour turnover survey showed healthy levels, while the weekly jobless claims data is still running at low levels. There is now near unanimous agreement among private forecasters that the Fed will begin raising short-term interest rates next month after holding them near zero for 7 years. Australian unemployment fell to a surprising 5-month low of 5.9% in October from 6.2%, sparking scepticism over whether the improvement would last. The job gains were sudden and almost too good to be true. But the scepticism did not extend to the currency markets, who have bid the Aussie higher, buoyed also by rising consumer confidence. In China, it has become clearer that the government there has significantly boosted spending in an attempt to push back against the economic weakness. Fiscal expenditures rose 36% in October from a year ago. This week's record Singles Day trading will no doubt help also. In New York, the US Treasury 10-year yield benchmark gave up another fraction of gains it made earlier in the week, now at 2.32%. The US benchmark oil prices slipped lower again today, now under $42 a barrel, while the Brent benchmark is at $44 a barrel. Surplus oil inventories are at their highest level in at least a decade because of increased global production. That's according to OPEC. They see growing demand, but supply is far outstripping requirements. Low oil prices will be here for some considerable time, it seems. The gold price is unchanged, however, at $1,087 an ounce. New Zealand dollar joined in the slippage and is now down with other commodity currencies. It is now at 65.3 US cents, a lot lower against the Aussie at 91.7 Aussie cents, and a lot lower against the euro as well at 60.5 euro cents. The TWI is at 70.9, its lowest level in more than a month. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.